3 months ago, I did a deep dive on the Department of Education looking at its founding under President Jimmy Carter in 1979, its original mission, and the compelling evidence that it has failed to improve American education despite consuming billions in taxpayer dollars. As you know, President Trump recently announced plans to eliminate the Department of Education entirely. I mean, it was a bombshell that sent shockwaves through the education establishment. Today, we're following up on what's actually happened since that announcement. What concrete steps have been taken, what's happening with charter schools and vouchers. Critically, for many of you, what's the latest on student loans? Whether you're concerned about your children's education, your own student debt, or simply the direction of American education policy, this update covers the essential developments you need to know. Let's dive right in. So, where do things stand with the actual Department of Education closure? Well, Trump has moved aggressively on this campaign promise. The administration has already done these following things. They've appointed a transition director specifically tasked with planning the department's closure. They've initiated a department-wide audit to identify which functions will be eliminated, which will move to other departments, and which will be returned to state control. They have issued executive orders freezing new regulations and hiring within the department. They've directed the creation of a detailed phase-out plan with targeted completion before the 2026 midterm elections. The biggest obstacle remains Congress, where legislation is required for full elimination. The Republican-controlled House has signaled support, but Senate negotiations continue. The administration appears to be pursuing a dual strategy, using executive authority to hollow out the department's functions while pushing for the legislative solution. Education Secretary Linda McMahon recently stated, "We're not waiting for permission to return education to states and families. Every function that can legally be devolved will be, starting immediately." While the department's fate plays out, the administration has made significant moves on school choice initiatives. First, let's look at charter schools. They're seeing massive support. The administration has redirected existing federal education funds to create a $5 billion charter school expansion grant. Bypassing the need for new appropriations, this money is being offered directly to states that commit to reducing regulatory barriers for new charter schools and expanding existing successful programs. Already, 12 states have announced plans to take advantage of this funding, projecting the creation of over 500 new charter schools nationwide within the next 18 months. These states include the following. First, Florida. They're planning 85 new charter schools with emphasis on STEM-focused institutions. Second, Texas. They're allocating funds for 110 new charter schools, particularly in underserved rural areas. The third, Arizona. They're expanding their already robust charter system with 45 additional schools. Fourth is Tennessee, creating 35 new charter schools with vocational specializations. Fifth, Ohio, establishing 50 new charters focused on urban educational alternatives. Sixth, Georgia. They're planning 40 new charter schools, many with specialized curriculum. 7, North Carolina, creating 30 charter schools with emphasis on classical education models. 8, Indiana. They're adding 35 charter schools with partnerships to local businesses for work-study programs. 9, Utah. They're expanding with 25 new charter schools, many using innovative technology methods. 10, Oklahoma. They're planning 30 new charter schools with emphasis on rural communities. 11 is Idaho. They're establishing 15 charter schools with outdoor education components. And finally, number 12 is South Carolina. They're creating 25 new charter schools focusing on technical career preparation. Now, the voucher program is moving even more aggressively forward. The administration has proposed the American Education Freedom Act, which would basically create federally funded education savings accounts worth approximately $7,000 per student. All these funds to be used for private school tuition, homeschooling expenses, tutoring, and educational therapies. As an optional program for states with incentives for early adoption according to the Department of Education transition team. Federal funding for this voucher program is slated to become available starting in January of 2026, with a possible early adopter program launching as soon as August of 2025 for the upcoming school year. States that implement compatible programs earlier will be eligible for retroactive funding, once the federal program goes live. 5 states have already passed companion legislation to be ready when federal funding becomes available. And guess who's top of the list? Florida. The Florida Educational Freedom Act. This establishes a state-administered voucher system that mirrors the federal proposal, allocating state funds until federal money becomes available. Their system is particularly notable for including provisions for special needs students to receive enhanced voucher amounts. Second, again, is Texas. The Lone Star School Choice Initiative not only prepares for federal vouchers, but also creates a state tax credit system for businesses that donate to scholarship funds for private education, effectively creating an immediate voucher-like system. Third is New Hampshire. Their Education Freedom Accounts program has been expanded and modified specifically to align with the anticipated federal program, with language that automatically incorporates federal funds when available. Fourth, a little surprise, West Virginia, the Mountain State Education Choice Act. This creates a comprehensive infrastructure for distributing vouchers with a focus on supporting rural families seeking alternative education options. Fifth is Arizona. Building on their existing Empowerment Scholarship Account program, Arizona has passed legislation to expand eligibility and ensure compatibility with the proposed federal standards. Meanwhile, 14 other states have similar bills in committee, with strong momentum in states like Arkansas, Iowa, Missouri, and Tennessee. You know, there's always critics out there, and they argue this represents an unconstitutional federal overreach into education. You know, it's kind of ironic, the same criticism leveled against the Department of Education itself. Supporters counter that. Vouchers actually return educational control to families rather than government bureaucracies. Now, to the issue directly affecting millions of American student loans. The current total outstanding federal student loan portfolio stands at approximately $1.77 trillion. That's a staggering figure that has actually increased since my last video, despite various forgiveness programs. The most dramatic change has been the reversal of many Biden-era forgiveness initiatives. You know, President Trump's administration, they're not playing around. They've halted the income-driven repayment plan that would have capped payments at 5% of discretionary income, known as the Saving on a Valuable Education plan. This plan, which was implemented in the final year of the Biden administration, you know, this would have reduced the monthly payments from 10% to 5% of discretionary income of undergrad loans, raised the income threshold, the discretionary income protecting more of borrower's earnings. It would have forgiven remaining balances after 20 years of repayment, 10 years for original balances under $12,000. It prevented unpaid interest from accumulating when payments were being made. Now, the Trump administration has instead reinstated the previous income-driven repayment structure requiring 10% of discretionary income with higher thresholds for what counts as discretionary, effectively increasing monthly payments for millions of borrowers by an average of $150 to $300 per month. They've also terminated the Public Service Loan Forgiveness Waiver Program. They've directed the Department of Education to resume aggressive collection actions against defaulted borrowers. And many things including our wage garnishments. Now, this is up to 15% of disposable income, tax refund seizures that can claim entire federal and state refunds. This is interesting. Social Security benefit reductions of up to 15% for retirees with defaulted loans. They've also implemented a revoking of professional licenses in states where this is permitted. New partnerships with private collection agencies, and the private collection agencies would receive up to 25% commission on recovered funds. There is the implementation of a fast-track resolution program that requires defaulted borrowers to make substantial good faith payments before entering rehabilitation programs. Announced plans to privatize much of the loan servicing system. The current default rates have increased to approximately 16% of all borrowers. So that represents about $283 billion in unpaid loans. Collection efforts have intensified with wage garnishments up 34% and tax refund interceptions up 47% compared to last year. Now, the administration has stated its intention to transition federal student lending to a market-based system where loan terms would be tied to program of study and projected earnings. Under this model, STEM, healthcare, and business programs would receive preferential rates, potentially as low as 2 to 3%. Liberal arts, humanities, and social sciences, where programs would face higher rates, potentially up to 7 to 8%. So programs with historically poor employment outcomes could see rates as high as 9 to 10% or be excluded entirely. Annual lending limits would be proportional to projected first-year earnings in the chosen field. Private lenders would become the primary loan sources with limited federal guarantees. The government would eventually gradually phase out direct lending over a 5-year period. Banks and specialized education lenders would receive partially federal guarantees, 50 to 75% against default. A competitive marketplace would be established where lenders bid for exclusive rates to serve specific universities. Credit scores would play an increasing role in loan approval and interest rate determination. Universities would share liability for defaults from their graduates through a new institutional risk-sharing mechanism. Schools with default rates exceeding national averages would be required to reimburse the government for 20 to 30% of defaulted loan amounts. Institutions would be required to publish guarantee outcomes, metrics for graduates. This is all a skin-in-the-game provision would withhold up to 10% of federal research funding from universities with persistent high default rates. For-profit institutions would face even stricter requirements, including bonding requirements based on anticipated default risk. 2-year vocational and technical programs would receive preferential loan terms through interest rate subsidies, reducing rates by 1 to 2 percent points, extended grace periods for graduates entering targeted industries with workforce shortages. Partial loan forgivenesses up to 25% for graduates who work in their field for at least 3 years, and fast-track accreditation for new programs addressing critical skill gaps. The transition timeline envisions a pilot program beginning in the 2026-27 academic year with full implementation by 2028. The Department of Education's Office of Federal Student Aid would initially remain operational during this transition before being restructured as a smaller oversight agency under the Department of Treasury. So what does all this mean for you and your family's education decisions? First, if you have school-aged children, the landscape is changing rapidly. The expansion of charter schools and potential voucher programs means you'll likely have more options in the coming years. Here's my advice. Start researching alternatives in your area now. As good programs often develop, waiting lists. Get involved in local education policy discussions as much control is returning to state and local levels. Consider flexible approaches like hybrid schooling. Combine traditional education with homeschooling elements for those with older children approaching college. Carefully evaluate return on investment for different institutions and majors. This administration's policies clearly favor programs that demonstrate employment outcomes. Look more seriously at trade schools and apprenticeships programs, which are receiving unprecedented support. Consider community college pathways to reduce overall cost. If you're dealing with existing student loans, don't count on forgiveness programs. They're likely not to continue. Consider refinancing federal loans to private loans only if you can secure significantly better terms, as you'll lose federal protections. If you're struggling to make payments, contact your servicer immediately. Communicate. Options still exist, but you need to be proactive. The education ecosystem is being fundamentally restructured, and staying informed will be crucial for making good decisions. Right now, we're witnessing the most significant transformation of American education policy in nearly half of a century. Whether you view these changes as long override reforms or concerning disruptions, depends on your educational philosophy and political perspective. What's undeniable is that families now need to be more engaged and informed about education options than ever before. The centralized one-size-fits-all approach appears to be ending, replaced by a more diverse, competitive, and frankly more complicated landscape. I'm going to continue tracking these developments closely, particularly as the legislation legislation to formally close the Department of Education works through Congress. In the meantime, I'd love to hear your experiences with these changes in the comments below. If you found this analysis helpful, please hit that like button, subscribe below for more updates on issues that matter to you and your family, and consider sharing with friends who might benefit from this information. Thanks for watching, and I'm going to catch you on that next one.